Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Okay, so what happened? The Federal Reserve increased interest rates by 0.25%. We all expected it. I expected it. I expected it so much that I told y'all a day early before it was going to happen. And everybody knew that this was likely going to happen because the Fed does forecast what they're going to do, or at least they try to, very early and very carefully in the way that they speak, which makes this one very important because usually when they ask, or when the reporters ask, or they state this, whether or not they're going to increase interest rates, they usually will say, this is from a Forbes article, in quotes here, that, they will increase them and it, quote, will be appropriate to continue increasing interest rates, that it will be appropriate, which made sense. You don't increase interest rates one time and then inflation is fixed, especially when it's at a 40-year high. It makes sense to slowly increase rates over time. We've been talking about this for a while, but they didn't say it will be appropriate this time. The quote that they gave this time around, I want to make sure I get it right here on my tablet. Okay, so they didn't refer to any future rate hikes this time. They said additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficient restrictive to return inflation to its 2% target. Sufficiently restrictive to return to its 2% target. Okay, what was all of that? That was some words here. So I'm going to break it down word by word, or most of the big words. Monetary policy, that's when increasing and reducing interest rates. Stuff the Fed does is qualifies as monetary policy. And then they want to make sure that this is enough, sufficiently restrictive to bring inflation back down to their 2% target. Now, the key thing here is instead of saying they will do it, they will increase interest rates in the future, they just say it may be appropriate. Now, you may be thinking that I am really digging into the weeds, that semantics and that may and will don't really matter, but they actually do when it comes to the Fed. This is a signal to the stock market that yes, we increase interest rates yet again, even though we see all this pain in the banking sector and in the stock market and just how people are feeling, but may be appropriate says that, hey, we're just going to let this ride and then we might not increase interest rates the next time that this comes up. And this could say we're going to pump the brakes and just stop everything right now, see what happens in the banking sector, but also, perhaps more importantly, we're not going to keep our foot on the gas and increase rates even further and push more banks into crisis mode. That is the expectation. Now, I don't have a crystal ball, even though I did tell y'all a day early about this, but that's one, completely different than what they normally would say. But also, you got to take that and forecast just like everybody else does around what's supposed to happen. We knew last year that they were going to increase interest rates. I told y'all last year that is likely that they are not going to cut rates until 2024. Now we will see. We got a long time, right? We will see whether or not that's going to happen. We also didn't see banks falling apart and crashing either. However, some feel that this, may be appropriate, could be the last interest rate we have in 2023, that everything will even out, and then we'll see what happens in 2024. It is still extremely early for me to be confident in that assumption and confident in what that could mean for the market. But this is the very first time that we have seen that they're at least open to the idea of stopping interest rate increases. That means a lot for us as investors, and especially as consumers. Number one, does this last interest rate increase mean that inflation is going to continue to fall without the further increases of interest rates? Is this the last time it's just going to steadily fall on its own? I don't know. That's something that we need to figure out. Will this stop some major corporations from continuously shedding jobs and people just get used to these higher rates and people just adjust and we stop losing jobs? Is that a possibility? I don't know. That could be something that's open. Does this mean that banks will stop failing and, we stop bank runs? I don't know. These are questions I don't have answers to. I'm sorry. But these are questions that are open now based on what they have given us. Now, the other thing too is we don't know how long this is going to last. And the most important thing is they're going to take a lot of this data, unemployment, inflation, the cost of literally everything basically, and factor that into the next few decisions. It seems right? This is the word that they use that I absolutely hate this word, and it's dovish, which means that they are being a little lighter, a little nicer to all of us by not increasing interest rates further after this time. Now we will see what this means, okay? But this is the first time in more than a year now that we've gotten a signal that they might start slowing down. And also remember, all these increases that they have done, they've slowly gotten lighter, right? 75, then 50 a few times, and then just 25. We've done that the last few times, and now it could just be nothing. We're done increasing interest rates. We're gonna let things settle out and then make a decision several months down the line. That's what it feels like based on their statements that they've said. Now, as an investor, what does this mean for you? That question, if you ask me, is still a little bit up in the air. Yes, I'm still investing. Yes, I'm still buying index funds and all that kind of stuff. A lot of that has not changed because there are a few ways that this can go. We have seen some tech stocks do well. We had talked about Tesla several weeks ago. We talked about Nvidia and AI. I'm going to do a video on AI here pretty soon. That seems to have gone well, but there's still a lot of moving and shaking. We know what's happening in the financial sector. Could this be a bounce back for finance now that we know or feel that they're not going to increase interest rates anymore? Is it now safe to start investing in that area? That's a question, right? I don't think so, but that's a question that now can be considered if this is going to be the case. So that is what's going on right now. It's super early. They announced this maybe 3 hours or so ago. So there's a lot of information to absorb and really see what the market does for the rest of this month, and also see what other companies do for the rest of the month. Will we see more failures? Will we see more layoffs? Or will things start to even out and we get a better picture from here on out? So that is what happened today. Wanted to explain a little bit of it. Let me know if you have any additional questions. I look forward to seeing those in the comment section below. All right, that is it for me. I'll talk to you later.